bit to kind of turn it around and attract diners.
But if you don't go to Domino's, where do you go? Like, what's the next thing in the food chain? I mean, if you're not going, we've seen some weaker results from some of the fast food chains, the McDonald's of the world, talking about going to more aggressive pricing. But boy, so I guess that, obviously it just coincides with a lot of the economic data we've had, which is the lower end of the consumer is in fact struggling more than others. And you see it in the results of some of these fast food, casual dining, and Domino's.
Totally, and I think on the sort of the flip side, the sort of mid-tier to higher tier ones are doing a little bit better. So we're seeing, if you look at shares of Costco this year, doing really well, a more mid-range to higher range customer than some of the other, like Five Below.
All right, what else?
The other thing that I'm looking at today is D.R. Horton. So this is a home builder. It's up about 11% right now. It's hit an intraday high. It's on track for its highest close on record. And this is interesting because it's really off a mixed report. So the earnings per share beat estimates. Orders were weaker than expected. At least one analyst said that, this is actually a pretty strong quarter. The company seems to have navigated sort of a tough rate environment. It's growing inventory on some areas and deferred sales into the next quarter. I think the other thing that's lifting shares here is that the company introduced or announced a new $4 billion buyback.
Okay,
so that looks positive for shares. And I think, another thing to note, so it's lifting the entire home builder index, which is also at its highest, at least since 1995.
Yeah, it's been a rip.
So Toll Brothers, Lennar, also rising.
Yeah, I'm just looking at the trailing 12-month stock performance for some of these companies, D.R. Horton. They're all up in the kind of, 30, 40, 50, 60% range over the past 12 months. The home builders have really had a great run because they're the only ones with any inventory coming to the market and the demand out there. Because if you're in an existing home, you're not selling. I'm sitting on a 3 or 4% mortgage. If I want to go out and buy something new, I'm going to be paying 6-7% mortgage. So keeping people on the sidelines. All right, Carmen Reinecke, thank you so much. We appreciate it. Carmen Reinecke, she covers all the equity markets for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Politics front and center. The Republicans are in Milwaukee here. We've been following it all week long. Jody Schneider's been really kind to give us some of her time this week to help us kind of keep tabs on what's happening out there in Milwaukee. Jody joins us here. She's a political news director for Bloomberg Television and Radio. She is in Milwaukee. So Jody, quite a speech last evening from the vice presidential candidate, Mr. Vance. And I guess if nothing else, just kind of cementing populism's hold on the Republican Party. What's the takeaway?
Yeah, I think that's exactly the takeaway, Paul. Cementing populism and nationalism. When we heard from him last night, it was a lot on that when he got to the issues. He first started full-throated support of Donald Trump. As we know in the past, he hadn't always been such a supporter of the president, but he has made it clear he has gotten well past that, and it was full-throated support of the president and of his agenda, his MAGA agenda. He talked about where he came from, how he grew up with a drug-addicted mother who's now clean, and he introduced her from the stage. But he basically talked about what that was like and how difficult that was, and how this line that we've been hearing the last few days, forgotten Americans, that these are the forgotten Americans, and he wants to champion them. Now, how he would do that and how he would help them, given that the agenda seems to be not, extra spending on social services, that has not been something that he has championed. But last night it was the rhetoric, it was the theme. And then he did talk about things like mentioned China and said, we don't want China to build its middle class on the back of our middle class, on the back of what he called working men. He was not reaching out to, did not seem to be reaching out beyond the base. He was clearly talking to the base. He's talked about unity, but he didn't mention things, like reproductive rights. He didn't mention things that might appeal to swing voters, although he did mention the swing states of Michigan, Wisconsin, and Pennsylvania, along with Iowa, his home state, more than 4 times last night. So clearly they're trying to go after voters in those states who may be disaffected by the Democrats. And he took shots at Joe Biden repeatedly through the night, through his speech.
Jody, is there anything left of the traditional Republican Party on the floor in Milwaukee, or are they just completely in the background?
Yeah, hard to see it. I do think there's some in the background. They still want the business community, and there's a lot of talk, of course, at a convention like this about who might be the Treasury Secretary pick, who might be, the Commerce Secretary pick, that kind of thing. But that's a lot in the background. Last night, it was all about the MAGA philosophy. They couldn't get enough of that, and J.D. Vance provided that. So that's what the party, certainly here in Milwaukee, looks like right now.
Very good. And we'll hear from former Vice President Trump this evening speaking. So that'll be obviously top of the agenda here. Jody Schneider, thank you so much for joining us. Jody Schneider, she's political news director for Bloomberg Television and Radio. She is remotely located right now in Milwaukee, Wisconsin, on the convention there. So we appreciate that. Let's talk to some earnings here. We had a big earnings play coming out of the financial services. Blackstone profit. Blackstone, just huge asset manager. It's just amazing how big they've become on global Wall Street. But their profit missed estimates as real estate exits slow. Let's bring in Paul Goldberg. He follows that part of the financial services sector for us. Paul, Blackstone, it doesn't get any bigger, more influential from an asset management perspective than our friends at Blackstone. Talk to us about the quarter they just reported.
Hi, Paul. Thank you for having me. The quarter was more or less as expected. You did mention they missed by a few pennies, but a lot of the profitability depends on realization activity, which was slow. And it wasn't just the real estate. It was kind of on the slower end across the segments and the strategies that they cover. So I don't think it's surprising. And what we saw is what we kind of see in the headlines. The private equity is improving, but slowly. Real estate's still kind of dragging its feet, and the private credit is being very strong. So the profitability that they showed was very much along those lines.
What are they saying about the real commercial real estate business? Because when I think about that business, I think about the Blackstones of the world. I think about Morgan Stanley. They've always been big investors in real estate. What are the smart people telling you about that part of the market?
The smart people at Blackstone said we got out of that market.
So
not completely. So there's still a few percentage of the portfolio in the U.S. real estate, and they still mention that it's pretty painful. And globally, there is some commercial real estate that they're in, but 3/4 of the real estate portfolio is in multifamily, logistic, data centers, where they're pushing with their AI. It's a very different composition. Can you see idiosyncratic pains, something going out of line? Yes, absolutely. But in terms of the future growth, I think they're positioned quite differently from what we've kind of seen from the banks.
And Blackstone is up about 3.5% today, the stock at a 52-week high. What are they saying about deal activity here? Because I know, Paul, the M&A market, the IPO market, last couple of years has been pretty slow. So it's tough for the Blackstones of the world to kind of realize and get some liquidity on their investments. What are they saying about that?
Yeah, so some green shoots there, some improvement in second quarter, although obviously not material enough to lift the earnings, but they're seeing things getting better into the second half. And most of it, and they kind of mentioned it 3 months ago on the earnings call, we'll probably have to wait till the end of the year and go into the 25 for a material improvement. And that's what you kind of seen in the consensus reflected, that people do see a significant lift. And in terms of activity, they deployed $34 billion. They had almost $40 billion of inflows during the quarter. So the activity is improving. It's not at the 2021 levels, and it will take some time to get back there, but it's better.
Hey, Paul, when you think Blackstone, you think Steven Schwartzman, the chairman, the CEO, the co-founder, one of the all-time greats, the giants in private equity. He's 77 years old. And I know Jonathan Gray there is the president COO, and he's 54. What is the succession plan there at Blackstone?
You did mention the two figures, and it kind of looks pretty straight at the moment, unless things change. But Jonathan Gray has been doing a great job, and Schwartzman is not planning to step away, as we're seeing at the moment, but there's a line of succession that's clearly there.
Paul, is Blackstone in a capital raise mode now? Where are they in terms of their capital?
I think with $1.1 trillion of assets under management and different buckets that I discussed earlier, they constantly in the fundraising mode. So the big areas where they're fundraising in infrastructure, they're fundraising, and mentioned data centers, then fundraising in wealth strategies. They have already $240 billion of assets that in different wealth strategies. Early in the year, last year, we had some issues where you saw some outflows from wealth strategies. They're all positive this quarter. So those are good things. And then they talked about the big flagship funds. They're raising more of them in the second half and even more coming back in 2025, which helps their fees.
Yep, absolutely. All right, Paul, thanks very much. Appreciate it. As always, Paul Goldberg, he's a senior equity analyst, Bloomberg Intelligence. He covers a lot of those asset managers, the KKRs, the Blackstones of the world. He also covers the Canadian banks, so he does it all for Bloomberg Intelligence. He's down in Princeton. I'm looking at Blackstone here. Again, the stock's up 3.7%. It's up at 52-week high, and it's got a market cap of $170 billion. You think about the big asset managers, the big private equity guys, Blackstone, Carlyle, KKR, just minting money year after year.
We've got passion, we've got determination, and if we set our sights on something, you better believe it's happening.
We always felt like our content was all about entertainment and being fun, but there was also this, sort of professional business side. One of the things that we knew was basically essential was getting our own website, so people would actually see a proper official group who mean business and who can deliver. And we always had this vision of bringing things into existence that previously had never been seen.
This is the world's largest act.
We bounced a plane, a boat and a car, and it was wild. So today, How Ridiculous have 50 million followers.
We're in the billions of views.
Tens of billions.
That's pretty good.
I don't know all the things that we're going to get to do in the next year or 5 years, but if we can do this as a job, anything's possible.
Do you know what's really fun? Making a website on Wix.
Investing with Kraken? It's like running a kitchen. You want to avoid waste. So you set up orders to get the prices you want for the ingredients that you need.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
On the
Bloomberg Interactive Broker Studio. I'm Lisa Mateo. Tech stocks, well, trying to battle back after taking a hit over worries of tight U.S. restrictions on chip sales to China. A big part of that rebound, though, Taiwan semiconductor manufacturing makes chips for Apple and Nvidia right now. Those shares up about 1%. What I want to do is check in with the chip stocks that were affected by yesterday's trade concerns. Remember, Nvidia was lower yesterday. Right now, Nvidia up about 2%. We have Broadcom up nearly 2%. But Advanced Micro Devices still taking a hit, down about 0.5%. All right, so we head to the NASDAQ, up 0.3%, 55 points. We have the Dow up 0.3%, about 142 points. We have the S&P 500 up 0.3%, or 20 points. We have the two-year yield at 4.44%. That's little change. The yield on the 10-year 4.17%, and that is little change. We have spot gold higher, $2,462 an ounce. Brent crude $84 a barrel. WTI crude $82 a barrel. That is your Bloomberg Business Flash, Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to that internet thing. Go youtube.com. Search Bloomberg Podcast out. Alex Steele's out today. They're telling me Matt Miller's going to be here at the 11 o'clock hour. I will believe it when I see it. Let's talk some real estate here. Commercial real estate, residential real estate. We can do that with David O'Reilly. He's the CEO of Howard Hughes. Howard Hughes is a publicly traded company. Triple HHHH is the ticker in your Bloomberg terminal. That'll bring it up for you. David, thanks so much for being here. And what brings you to New York City other than being that world's financial capital?
Always a pleasure to be here. Thanks for having me. We do have an asset here at the South Street Seaport in the Lower East Side of Manhattan. Okay. We're in the middle of filing with the SEC for a spinoff of those assets into its own separately traded company focused on entertainment that will leave Howard Hughes positioned really just entirely focused on building world-class communities that we've been doing since we were
formed. I got some stories from me and my gang at South Street Seaport in the late 1980s. We'll just leave it at that. Talk to us about, first of all, Howard Hughes. Where did this company come from, given the name?
So it was spun out from General Growth Properties. Bill Ackman at Pershing Square took control of General Growth, the mall company that went bankrupt 14 years ago. And he found in the mall company were these great communities, the Woodlands outside of Houston, Summerlin outside of Las Vegas, Columbia, Maryland, between D.C. and Baltimore. He said these companies don't belong in a public mall REIT.
Okay.
They need their own company.
All right, so let's just talk, I'm just looking at what you guys have there. Let's talk about office space. You have 6.8 million square of office space, 6.8 million square feet of office space. I go through any town, USA, any office yard, you're going to see the sign stuck in the grass outside, X number of square feet for rent here. Mm-hmm. What's your portfolio look like in terms of occupancy rates, that kind of thing?
Yeah, our occupancy is trailing up at close to 90% last quarter.
Really?
And it has defied gravity and really defied the national headlines of doom and gloom.
Why is that, do you think?
You know, we, during the pandemic, saw the migration of a lot of really smart, well-educated workers coming from the coast, leaving higher crime, leaving higher taxes, chasing quality of life, chasing affordability. And now we're seeing companies chase those employees. And we're seeing those companies come in from those big cities into places like the Woodlands, where we filled up over the past 2 years almost 750,000 square feet.
Interesting. So where is your office space today versus maybe pre-pandemic in terms of vacant occupancy and rate and that kind of thing?
I would say vacancy is a tick higher. We were about 92% pre-pandemic. Rates are almost identical.
Really?
Yes.
Interesting, because I mean, you know, the story in cities like New York City, for example, you know, the story here is if you're in an A office space like Bloomberg's headquarters, you're fine.
Right.
If you're in anything else, good luck.
Tough sledding.
Yes.
No doubt. But in a community like the Woodlands, we control the development of all new product. So we're only building to meet supply. There aren't four folks with a shovel in the ground all at the same time rushing to be first and the other three lose. So by controlling the supply side of the equation, we were able to mitigate some of those bigger swings that are typically associated with the office market.
6,000 multifamily units. Where are those units, generally speaking, and how's that business doing?
The business is incredible. We've seen great same-store growth year over year. And a big picture, we have a 3 million plus housing unit shortfall across the country, and multifamily is trying to address some of that, especially from an affordability perspective. Our portfolio in the Woodlands remains high 90s, rents increasing year over year. Same with our portfolio in Columbia and Summerlin outside of Las Vegas.
I love Summerlin. Another great golf course there in Summerlin, all those courses out there. How is Vegas doing generally? Because that's one of those markets up and down. It's kind of the poster child for when things are great, poster child when things are bad. Where are we now in that cycle for Vegas?
Vegas is in a really good spot right now. You know, we're selling over 1,000 homes in Summerlin this year and last year. We hit record home sales. First quarter, we were up 24%. Builders are buying land from us at a record price per acre, and we're, you know, kind of the catcher's mitt of all those residents looking for quality of life.
All right, you've got a land bank. I'm not a real estate guy, so I don't know what a land bank is. I'm guessing you guys own 35,000 acres in a land bank.
All right.
What do you do with that
Yep.
stuff? You develop it or you sell it?
We play SimCity. We put in the roads, we put in the hospitals,
Okay.
police, fire stations, wastewater treatment plants, and then we grade land and sell it to home builders who build homes. Residents move in. They need commercial amenities, places to shop, office buildings to work. We build those with the cash from selling land to home builders and create these communities like Summerlin. Sometimes we build golf courses.
Right, exactly. The TPC Summerlin, I've lost a lot of golf balls in that desert. What's next? What's the growth for your company here? I'm looking at just on the Bloomberg terminal here. Here's your company, folks. You got a market cap of about $3.7 billion. This company's got revenue, about just right around $1 billion. $1.2 billion is the forecast for 2024. EBITDA, which is what I look at, because actually you guys are a real estate company, so operating income $300 million. So this is a real size company, some heft. You got about $5 billion of debt on your balance sheet. Where's the growth going forward?
It's across all of our communities. Our job is to transform that raw land, that land bank, as you referred to it, into income-producing assets by meeting the demands in our community. And like I said, across our portfolio, our multifamily is very tight, high 90s occupancy. We need to build more. So we're moving very quickly to start that next multifamily project in the Woodlands and the next one in Summerlin to meet the demand that's in that community.
So it's better to stay, I guess your strategy is to take your existing communities, the Woodlands outside of Houston, Summerlin in Vegas, and expand those as opposed to saying I'm going to Phoenix or something.
Well, it's funny you should say that. 2 years ago, we went to Phoenix and bought 37,000 acres in a community called Terra Vallis. We're entitled for 300,000 residents and 55 million square feet of commercial space, roughly the size of St. Louis. We've already under contract and sold over 800 lots to home builders at over $700,000 an acre to meet the housing demand that exists in the West Valley of Phoenix.
So who builds the homes? Do you build the homes or do you go to D.H. Horton or Toll Brothers or one of those guys?
We sell to all the public builders, a lot of large regional private builders as well. We try to be Switzerland, sell land to whoever bids highest and delivers the best product.
What's this interest? We've been in this interest rate environment for the past couple of years at much higher rates. We all grew up, it seems like over the last 15 years with zero interest rates. How's that impacted your business's higher rates for longer?
It's been an accelerant. And it's absolutely contrary to popular opinion, and it's contrary to the headlines that we read every day that higher rates is killing homes, they're less affordable. But really what it's done is it's taken out supply. There's almost no resale out there.
You're right.
So the home builders, the new home construction, which is our business, are thriving. We've seen greater demand for those new homes than we have seen in a long time. And if you add in that last month, for the first time in decades, new home pricing was less expensive than resale. New homes have typically traded on average for 20 years 17% premium. Last month they were less expensive.
Interesting.
And it's really pushing a lot of buyers that want that quality of life in our communities to buy new home construction, and that has been an accelerant on our business.
I'll tell you, just D.H. Horton just today, the stock jumps to a record high as their third quarter earnings beat estimates.
Look, sometimes I'm lucky, not good. I think it was about 6 months ago I thought that 2024 would be the golden age of home building.
Right.
Rates would start to tick down a little bit so that we'd see more demand in buying homes, but not so much that we'd see resale pick up. And the record margins that public home builders have been printing, 25 to 30%, which to me, I don't remember that in my career, just going to remain strong.
So when you're selling land to a D.H. Horton, you're like, I'm not giving you a break on this land. I just saw your earnings yesterday. You guys are crushing it.
We put them out for bid, and we bid based on a couple of different factors. One is price per acre, but other is our builder price participation. We were expecting a home to sell for, call it $500,000. If it trades for $600,000, I get about 20% of that upside.
Okay.
To make sure, it's a little bit of schmuck insurance, right? If the market rips, I want to make sure I get paid for my dirt appropriately, so we have a little true up at the end when the homes are sold.
Interesting. That's so smart. What do you expect interest rates to do here. I mean, here, this global Wall Street, that's all we talk about, it seems like. You're on the ground actually in the business.
Yeah, look, if I knew for sure, I wouldn't be talking to you. I'd be on a beach somewhere. I do think, rates will start to come down towards the end of the year. I think it'll be a modest decrease. I don't think there'll be anything massive that will shift the tide, so to speak. And I think it'll continue to be good for new home sales, continue to be good for home builders, and continue to be good for the value of our land.
All right, very good. And we'll see. I mean, again, D.H. Horton came up with some big numbers today. So that new housing market remains very strong. And if you've got quality properties like, the Woodlands or, Summerlin, good spot to be. David O'Reilly, thank you for joining us. David O'Reilly, he's the CEO of Howard Hughes, trades on the NASDAQ. The ticker is HHH. It's got a market cap of $3.6 billion, up 1.4%. Today. We appreciate you coming in.
Always
very well. Looking at the markets here, S&P 500, a little bit softer here than we were earlier, up about 0.1%. The Nasdaq's actually down here, had been trading up about 0.2% of 1%. We're now off just 13 points here. We'll keep an eye on that. I'm going to call it out for Tom Keene. The VIX, 14.4 here. Looking at the yield space, 10-year Treasury, 4.16%. That's pretty steady on the day. WTI crude oil steady as well, just above $82 a barrel. And gold hitting another high today here, $24.62, up about $3 today. And Bitcoin, in honor of Matt Miller joining in just a moment, it is off slightly, $64,250. With our news in New York City, Michael Barr.
Thank you very much, Paul. Former President Donald Trump is expected to deliver his acceptance speech for his party's nomination this evening at the Republican National Convention. Trump says he rewrote his speech after the assassination attempt against him. This morning, Trump told crowd, "God was with me after the rally shooting." Vice presidential nominee J.D. Vance continues to introduce himself to the nation. This morning, he spoke at the Faith and Freedom Coalition breakfast at the RNC in Milwaukee. He had high praise for former President Trump.
Remember that this is a guy who delivered for social conservatives more than any president in my 39 years of life. I think he deserves a little bit of grace, and he deserves a little bit of trust, and I hope that we will all provide that to him. I certainly know that as his running mate, I will.
And a footnote, before former President Trump speaks tonight, Hulk Hogan will reportedly deliver an address. Nearly 24 congressional Democrats are now urging President Biden to step aside and let someone else face Donald Trump at the polls in November. Meanwhile, Biden is off the campaign trail. He was supposed to speak yesterday in Las Vegas to a Latino civil rights and advocacy group. Unidos U.S. organization President Janet Murguia took to the stage to make an announcement.
I was just on the phone with President Biden, and he shared his deep disappointment at not being able to join us this afternoon. The president has been at many events, as we all know, and he just tested positive for COVID.
Biden is isolating in Delaware, the White House describing his symptoms as mild. At round one of the Open in Scotland, American Justin Thomas is on top of the leaderboard at 3 under in the clubhouse. Global News 24 hours a day. And
to pay an invoice,
no.
Please press 4 now.
Talk to a person.
Help closing your account.
Running a business alone is hard.
Okay.
But with AWeber email marketing, we're here when you need us. AWeber, simpler email marketing.
Wayfair presents lighting. Get the latest looks with top fixtures at low prices and a huge lineup of floor lamps, all under $79. Shop tons of table lamps, $49 or less. Go modern, stay classic, or get weird in a good way. Plus, Wayfair has installation services and fast and free shipping over $35. All the lighting, none of the stress. Now that's a glow up. So hit the lights. Shop lighting for way less at Wayfair. Wayfair, you've got just what I need.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have more Fed speak. Federal Reserve Bank of Chicago President Austin Goolsbee suggested the central bank may need to lower borrowing costs soon in order to avoid sharper deterioration in the labor market. He didn't say how soon. We have a shift to the markets now. We have the NASDAQ down 0.3%, 59 points. The Dow up 0.1%, 44 points. The S&P 500 down 0.1%, or 6 points. The 2-year yield, 4.44%. That's little changed. We have the 10-year yield at 4.17%, and that is little changed as well. Quick check of currencies. We have the dollar stronger, Japanese yen weaker at 156.62 against the dollar. We have the euro weaker, the British pound weaker, Bitcoin down about 0.5% at 64,092. What's moving the markets? Oh, we've been talking about a Tex-Mex restaurant, Chuy's Holdings. It's up right now, 47%. Darden Restaurants, you know them. They own Olive Garden, Longhorn Steakhouse. They agreed to purchase the company, so there you go. And then you have Domino's Pizza on the flip side, down nearly 12%. Had a tough second quarter. Discounts, new product launches couldn't really help it out enough. And the numbers are in for Prime Day. Yes, U.S. shoppers spent $14.2 billion online during Amazon's two-day sale, up from 11% a year ago, in line with estimates. That's according to Adobe. Paul, the average household spent about $152. That's down a little bit from last year, but the top-selling products, protein shakes, Amazon's Fire TV stick, and Glad trash bags.
Sure, who doesn't need those?
I got 2 packages on my doorstep yesterday.
Now, did Mr. Mateo, did he participate in Prime Day?
Yes, he did. He's
Okay.
the shopper in the house.
Very good.
I got another umbrella to put on the beach and in the softball field because we need another one.
Sure, who doesn't?
2's not enough.
Very good. All right, Lisa Mateo, thank you so much. We appreciate that. Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. Alex Steele is off today. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcasts. As Lisa was just mentioning, U.S. shoppers spent $14.2 billion during a 48-day Prime Day. I was not one of them, but that's up 11% from a year ago, as Lisa was reporting. So pretty solid results there. You got to like that if you're an Amazon follower. Poonam Goyal, she is an Amazon follower. Senior U.S. equity e-commerce and retail analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey via Zoom. Poonam, the numbers Lisa was just reporting, $14.2 billion, 11% growth year over year. That seems pretty good to me. What do you think?
Yeah, the numbers are great. They continue to show that shoppers are focused on sales and they're seeking value. And when Amazon and others have events such as these, they do drive traffic and conversion onto the platforms. So really good numbers. Likely some pull forward and spend. So you will probably see things taper off a little bit after the Prime Day sales event, but nonetheless, a very strong start, it seems, to 3Q for Amazon.
Yeah, I was just looking at eMarketer, which I know is an independent group that kind of looks at this stuff. They were expecting U.S. shoppers to spend $8.2 billion on Amazon during the event. So I guess better than expected is the way to think about it.
Yes, I mean, the numbers are a little different because the numbers that Adobe reported are not just on Amazon, they're total online sales.
Gotcha, okay.
But nonetheless, very strong results, and they are better than Adobe's initial estimates for a 10.5% increase.
Average household spend $152 on Amazon on Prime Day. That sounds like a good number as well. How does that stack up?
It's a good number. We expected Amazon shoppers to shop less this year on Prime Day than last year, according to our own survey that we ran ahead of Prime Day. So not surprised there, as shoppers are crunched for cash and they are trying to be picky and choosy on where they spend and what they spend, shopping really on the lists that they had going into Prime Day. So we're seeing a little bit of that. But overall, more shoppers joined Prime Day this year, reported by Amazon, which proves to be even more encouraging because, when you see that, that trend hopefully holds up and drives more shopping on the platform even after Prime Day.
You see numbers like the Amazon Prime Day number, the 11% growth year over year. It seems like a really strong number. We had retail sales earlier in the week, came in better than expected. I know the consumer's hurting out there. I know inflation's hitting a lot of folks really hard, but it doesn't seem like we're seeing it in the spending. How do you guys think about it? What do you hear from the companies that you cover?
Yeah, I think it depends on the retailers that you're looking at. I do think that, we've talked about this in the past where the value customer is trading down. We've seen that in the results earlier this year at Walmart, where numbers are strong because they are driving in more customers into their doors and online. And then the middle, the department stores, they continue to get squeezed to the large extent. And I think that trend will continue. So I do think that where there's right product, the right price, customers are going there. They're still going to experiences. They're going for convenience, which is where Amazon plays a big role. But they are being picky and choosy, and there will be some bifurcation when they report between the numbers because not everyone will do well, as we're hearing and seeing in these numbers.
It's only mid-July, but I guess people with kids have to start thinking about back to school. My guys are all out of that stage, thankfully. What's the back to school season look like this year? What are the expectations?
Yeah, the expectations are for back to school season sales to grow, and Prime Day is going to help with that. This year's Prime Day event came a little later in the season, which means that more back to school shopping likely occurred, dorm shopping, etc., on the Prime Day sales event. That said, you will see people buy backpacks, you will see them buy supplies, you will see them shop for dorm room stuff and apparel. But at the same time, where are they shopping for that? I think the retailers that are going to drive that spend are continuing to be the same. It's going to be the Amazons, it's going to be the Walmarts, the Targets, where they can get the value that they're looking for.
So what is the expectation for the holiday season this year? Are you guys forecasting growth in holiday spending? Because I know that's the big season for retailers.
We are expecting growth this holiday season, but I do think there are challenges as we enter this holiday season. Keep in mind that the retail calendar is different this year, so it is a tougher calendar comparison. Last year was very, very strong. Last year had some extra selling days, so the calendar shakes up as being a headwind and going into the holiday season. That said, with elections and just so many other things happening this year, we do think the consumer is going to be a little diverted. So retailers will have to work harder to capture their spend. And it will be a tougher holiday season, but we do see some growth still this year.
What are we seeing just in that dynamic, Poonam, of the bricks and mortar versus e-commerce? Because we've gone through, I'm going to say, almost a generation of downsizing retail footprint in the United States. And I kind of got the sense that during the pandemic, that kind of slowed, if not reversed a little bit. Where are we on that dynamic between I need to own some brick and mortar versus, I can kind of lean more heavily on retail, e-tail?
Sure. So I think, we'll always need brick and mortar stores. I don't think they go away, but we've talked about this before. I do think we need some balance, and we're still continuing to push forward on that balance. There will be more consolidation in retail. I think it's necessary because we still are overstored, but at the same time, we have retailers coming in from abroad that are expanding, whether it's the Primarks, once again, a value play, or whether it's the Aldis and some of the grocers. We are seeing them take space as they encroach on the U.S. landscape. That said, our estimates call for retail sales growing to a third, e-tail sales growing to a third of total retail sales, up from 25% last year. So still high single digit, double digit growth in the online landscape for the next 5 to 7 years, which means that people will be shopping less at brick and mortars and more online. And we saw that trend come back. Right after the pandemic, you saw this rush to stores because people wanted the experience of seeing things, touching things, being out there. But now they've normalized again, and we are seeing the shift back to shopping more online.
All right. Interesting stuff. Poonam Goyal, thank you so much for joining us. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst, Bloomberg Intelligence, joining us via Zoom from Princeton. Talking about Amazon again, the Prime Day, that 48-hour period where people just go nuts on shopping on Amazon for some of those deals. Stock's off 1.8% today. Amazon's up 21% year to date, though, and it's got a market cap. You ready for this? $1.92 trillion. So just an amazing story that continues to go. And again, think about Amazon.com, it's really now technology play on their cloud business, AWS. That's what's driving all of the profit, and it's been a big driver of the stock's performance as the tech story takes over for the retail side of the business here, but still that's a big part of Amazon. Looking at the markets, we've gone from green to now red. S&P off about 6 points. The Dow is flat, and the NASDAQ's off about 0.3%, so a little bit of a rollover in this market.
Welcome to Sales Market. To get started, head over to the login page and start browsing the site. Sales Market is an all-in-one B2B marketplace that provides members with all the sales, marketing, and tech solutions your company needs. Click and open the menu to see all the available solutions the marketplace has to offer. For example,
welcome to Sales Market. With Campaigns on Demand, you get a specialized team.
Our signature product, Campaigns on Demand, consistently delivers exceptional results and always has customers coming back for more. Let us show you what we can do for you.
Hi, my name's Nee. I'm part of our specialized tech sales team.
Please reach out if you have any questions.
We thought the vendors were our friends. But at the end of the day, guess who was left holding the bag? This guy. We negotiated a loan without a hired gun. We were guessing. It was like a damn game show.
.5%. United Airlines pointing the finger at carriers who have been slashing prices to try and capitalize on record summer travel. It said its third quarter profit will fall short of expectations. Sid Phillip covers the airlines for Bloomberg News.
summer travel is basically when they make most of their money. And for carriers like United and Delta, they were expected to be sort of raking it in during the summer season, and that isn't happening. That airlines talking about how that's being impacted by overcapacity in the general market from the low-cost carriers.
United down, up nearly 2%. And shares of home builder D.R. Horton, they are, well, it looks like they're up about 12%. It reported weaker than expected orders in a quarter high with high mortgage rates. Then you have Nokia, ADRs right now. They are down 6%. Quarterly sales in the second quarter missed estimates, and they were the lowest since 2015. That was due to weak investment in mobile network upgrades. Shares of Abbott Laboratories, that's where we're headed to next, down about 1.5%. It boosted its full-year adjusted EPS forecast. And Novartis, that closely watched prostate cancer drug, well, it disappointed, and that took the shine off of its raised profit forecast. Right now, its ADRs down nearly 4%. And some changes could be coming to Warner Brothers Discovery. The Financial Times reporting the company considering splitting its streaming and studio business from legacy TV. Their shares are lower. That is your Bloomberg Company News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, you're listening to Bloomberg Intelligence program here. Paul Sweeney, Alex Steele is off today. Bloomberg Intelligence, 475 investment professionals around the world covering 2,000 companies, 130 industries, equity research, fixed income research, commodity research. They do it all. We feature them on this program in Bloomberg Intelligence. And we also feature world and national news. And with that, we go to New York with Michael Barr.
Thank you very much, Paul. White House officials believe former House Speaker Nancy Pelosi backed Representative Adam Schiff's call for President Biden to withdraw from his re-election campaign. That's according to a Reuters report citing a top White House source with direct knowledge of the matter. Blackstone executive and billionaire Democratic donor John Gray said he hopes President Joe Biden weighs the intense physical demands of running the country for another 4 years.
Well, the president is a good man. He has been a wonderful public servant. And like Speaker Pelosi said, you know, he's gotten the votes in the Democratic primary. This is his decision. But I would hope he considers the really extreme physical toll of this business, of this job, I should say, over the next 4.5 years. And so, again, his call, but it is a very challenging physical job.
Gray's comments come as some Democratic donors have said they will withhold any future contributions until Biden is off the ticket. And Biden is also dealing with another issue. He has been diagnosed with COVID and had to cut short a campaign stop in Las Vegas yesterday. The president's doctor said in a statement that he has mild symptoms. Dr. Celine Gounder, editor-at-large for public health at KFF Health News, has more on President Biden's COVID diagnosis.
Older people, even those who have been vaccinated and boosted, are at increased risk of developing a more severe case of COVID.
Dr. Gounder spoke to CBS. The White House says the president will self-isolate. Day 4 of the Republican National Convention wraps up tonight in Milwaukee. Day 3 was about the GOP vice presidential candidate.
My name is J.D. Vance from the great state of Ohio.
J.D. Vance told his story of growing up in poverty. Former President Donald Trump will wrap up the convention with a speech tonight. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Poll.
All right, Michael, this story is for you here. I've been in this investment business for a long time. The value of sports teams just never goes down. So look at this. The looming bidding war for the NBA expansion team expected to be granted to Las Vegas is shaping up to be the most competitive and expensive sports deal in U.S. history. The list of potential suitors spans LeBron James and his backers to the company that owns the Red Bull brand, according to people familiar with the situation. Get this, Michael. The total price tag, including building a new arena, has the potential to hit $7 billion.
And you know what? When I've always said this, and all the experts have said it, you know when you make the money on an NBA team or any sports team, when you sell it.
When you sell it.
And that's what's going to happen. The arena could cost whatever.
Yep.
But when they sell it, they're going to get their money back.
Exactly. And in this Bloomberg News report here today, they have just a chart with some of the most recent transactions. Washington Commanders in the NFL, $6.05 billion in 2023. The Denver Broncos, $4.65 billion in 2022. And the Phoenix Suns in the NBA, $4 billion. So the numbers are massive, and they just go up and up and up.
It just makes me realize I can't even afford a cup in the stadium. That, I mean, but I tell you, it's the money is out there, and that's the reason why a lot of these sports entities are saying, you know what, we'll take a lot of minority investors now, because it takes a lot of money to buy these teams.
Yeah, it does. And boy, owning a team in Vegas just seems like the best of all worlds. I mean, you just got a great, vibrant city. And now that all the sports leagues have embraced betting, I can't think of a better market to be in.
Well, yeah. And it used to be that Las Vegas said, you know what, even though there's online betting, we're not going to bring it at first to our state in Nevada.
Yep.
But then someone said, you know what, that's silly.
Yep, very interesting. All right, Michael, thanks for chiming in there. I knew that was a story you would like here. Boy, so again, the NBA looking to get to Vegas. We had a little football game there last year, the Super Bowl, so it's good to be.
Kraken client support. It's like soccer. Out there, you can't see and know everything, but I'm connected to experts who have another perspective, who I can chat with whenever I need to. They're here to give me support and answer my questions. We all need a little help sometimes, but once it's decision time, that's all on me.
DigiCert Trust Lifecycle Manager helps you do what your organization needs PKI to do. Prevent outages, manage risk, and enforce policy. That's digital trust for the real world.
Blue chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, folks, it could all go off the rails in this hour. Darkening the door is one Matthew Miller, fresh off the television set. He's going to sit in with us for the next hour. Matthew, thank you so much for joining us.
It's a pleasure to be here. It's been a while, and there is a ton going on right now.
Absolutely is.
I mean, I note that the Dow is up. On my show, no one cares about the Dow Jones Industrial Average. It's up for 7 sessions in a row.
Exactly. I know. It's been just kind of ripping here. We started off the day with some green on screen. Now it's kind of mixed out there, but we'll get to all that stuff here. Geethan Ranganathan's going to join us. She's going to preview Netflix earnings. That's a good story, and it's all about the subscriber growth there. Old buddy of yours is going to join us, Matt. Joe Brusuelas, chief economist at RSM. We're going to get his economic call there. So
Great economist. I've known him for almost 2 decades.
Yep.
And he was in my motorcycle gang.
Really?
Yeah, it was me, Joe Brusuelas, Rosie.
Okay.
A couple other guys.
I have a moped. Can I join that? I have a Vespa scooter.
Vespa's welcome.
Piaggio. Very good. All right, let's start off this hour like we do with Mr. Charlie Pellet.
Thank you very much, and welcome on board, Matt Miller. We have got the Dow higher. Nobody cares, according to Matt Miller. We've got the S&P, NASDAQ, both in the red right now. But perhaps the key takeaway at this hour, little change. We got the Dow up 10, swinging between gains and losses right now. S&P 500 index, we'll call that unchanged. And NASDAQ right now down 19, drop right now of just about 0.1%. A rebound in stocks is waning as a rally in chip makers failed to prop up the broader market. The euro fell on bets that the European Central Bank will be cutting rates in September. 10-year, 4.16%. The 2-year right now, 4.43%. Spot gold, little changed, up $9 the ounce to $24.67. And a retreat for crude, West Texas Intermediate, now at $82.54 a barrel, lower by 0.4%. Wells Fargo strategists are upgrading U.S. banks on the so-called Trump trade. Chris Harvey is head of equity strategy at Wells Fargo Securities.
We didn't expect what happened this weekend to happen. And what that did, it made the probability of Trump taking the presidentship from likely to highly likely. And then suddenly, we weren't talking about the fundamentals anymore. We were talking about policies. We were talking about tariffs. We were talking about taxes. We were talking about regulation.
You can hear more of the conversation with Chris Harvey of Wells Fargo on the Surveillance Podcast. You can download it wherever you get your podcast. Briefly, Taiwan Semiconductor Manufacturing is lifting projections for 2024 revenue growth after quarterly results beat estimates. Taiwan Semi right now down 0.6%. Again, recapping, S&P little changed, lower now by 0.5 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Matt Miller, the Matt Miller, sitting in for Alex Steele today. It's Paul Sweeney as well. Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast, and that is where you can find us.
Oh, speaking of Bloomberg Podcasts, I have one.
Oh, what do you got?
It's called Hot Pursuit.
With Hannah.
With Hannah Elliott on the West
Wow.
Coast, me out here in New York. We talk cars, cars, and more cars.
Can't imagine. She's got quite the social media going. I mean,
Yeah,
she's very active, and she's all over the world in some of the best cars I've ever seen.
Yep, she's constantly flying around, testing out the most expensive supercars and hypercars. Plus, she's deeply connected with all of the biggest collectors around the world and the auction houses.
Yep.
So she basically covers the high end, and I do like American muscle and trucks.
There you go.
But it's a great podcast. Hot Pursuit. Get it wherever you get your podcasts.
Bailey Lipschultz joins us here. He covers all the equity markets for Bloomberg News. Bailey, what are you looking at here today?
I unfortunately don't have a podcast, but maybe one day I will. I
can't believe you don't.
I don't know what I would talk about.
What do you say in your review? I mean, doesn't your boss say, Bailey, you have no podcast?
I think that actually is what the conversation goes. Then I shrug, and then we move on with our lives. But anyway.
Well, you can be on our podcast today.
Oh, exactly. So, it's a win-win. I make guest appearances. Matt, as you mentioned, Dow up again, all-time high for the Dow, all-time high on an intraday basis for S&P 500 equal weighted index, so SPW.
Nice. Okay.
So it's the catch-up trade, the broadening trade, if you will. Keeping an eye on home builders, this coming after D.R. Horton jumped more than 11%, record high, 3Q, EPS beat expectations. Analysts.
This is fascinating to me, by the way. As President Biden floats the idea of capping rents at 5% increases, you have home builders hitting an all-time high. Do they doubt his ability to push legislation through?
As we say tongue-in-cheek.
I would just say more, you look at the expectations that while inflation and interest rates are high, people need to buy houses. So you're looking at, there's still so much pent-up demand. When we go back to some of the conversations we had a year ago, no matter what, people would agree that there wasn't enough of a build-out of new homes since 2008. So you're seeing maybe some of that right-sizing. Broadly speaking, though, REITs have also been on a tear. Again, part of that kind of catch-up trade, if you will.
Last hour I interviewed in studio here David O'Reilly, the CEO of Howard Hughes, and they own the Woodlands community outside of Houston, which is awesome.
Yep.
They own Summerlin right in Vegas, which is another huge community, golf courses, all that kind of. They're like 95% sold, and they have like a gajillion of acres in their land bank that they're putting out the bid to the D.H. Hortons and the Toll Brothers.
Well, if they're renting any of those properties, they'd be subject to the cap at that size. But I want to point out, speaking of podcasts, there's another one that we have on Bloomberg, Odd Lots, with Joe Weisenthal and Tracy Alloway. They recently had Jim Milstein on from Guggenheim Securities, and he's got an idea that could unlock billions more in capital for home builders, which is, and he used to work for the Treasury, right, which is using Fannie and Freddie to pass on loans to these home builders at government costs. So I just think it's a fascinating a podcast, and if you're interested in home builders, you should definitely check out Odd Lots this week.
Very good. What else you got for us, Billy?
Looking at another stock that's up, probably near and dear to your heart, Paul, I will say Warner Brothers Discovery up 6%. This coming after a Financial Times report. It's considering separating its streaming and studio business from legacy TV. Number of options being floated, Paul. I don't know how you feel about.
Well, it sounds exactly like I was just saying earlier. I have the pitch book that I would have made already in my head. I can already see every single slide in that pitch book about why you should do this.
We bring things together, we break it up, you know, rinse and repeat, make some money on fees. Stock down even after today's rally. It's on a 6-day winning streak, still down 31% in the last 12 months. So could be a bit of short covering, maybe a bit of bottom feeding. One stock that certainly is not faring well, Domino's, down as much as 13%. Biggest intraday drop, guys, since May 2012. Oof. They surprised investors by cutting their international store growth target, saying that their franchisee Domino's Pizza Enterprises is going to be the driver between that need to suspend the long-term guidance. They were talking up 1,100 new global stores in the near term. And really, when you look at that, that was a target unveiled 8 months ago. So you bring out the long-term. You got it back.
I don't even need Ozempic to stay away from Domino's.
You're from Ohio.
If you're ordering Domino's pizza, you've given up on pizza.
All right, here's my Domino's thing. My 28-year-old son, when he was about, 12, Domino's was way out in front of everybody with an app. And being the 12-year-old, he thought he was very cool. He maybe just got his phone.
I remember that.
And every weird hours of the day and night, Domino's be knocking on my door. I'm like, what the hell? And I yell up to him, I was like, get your ass down, get down here. So, but
they were very good. They were very good at that.
On,
now obviously Pizza the Hut has an app as well. And I would say of the 3 publicly traded pizza makers, well, first of all, I think they're all awful options for good pizza, right?
But you didn't have good pizza in Ohio.
The best pizza in the world is made in Bexley, Ohio. There's a little mom and pop shop called Rubino's. Rubino. Rubino's. Okay. I grew up eating there. My parents grew up eating there. My grandparents grew up eating there. There is no better pizza than Rubino's in Bexley, Ohio.
I take it back.
See, yeah, that's where you struck a chord, apparently.
I did. All right, Billy, thanks so much for joining us here. Billy Lipschultz, he covers all the equity markets for us. We appreciate it. All right, we're going to talk to an expert on the media space, Geetha Raghunathan. She's a U.S. media analyst for Bloomberg Intelligence. She joins us via Zoom. Hey, Geetha, before we get to Netflix, I know that we're reporting after the close here tonight. What do you make of this news? This sounds like something you would write, Geetha. You put out a research report saying you should split up your streaming businesses in your studio from the stuff that people really don't want, like the networks. What do you make of that? Is there value there? Is there an opportunity there?
There probably is, Paul, as you well know. I mean, obviously, the stock, Warner Brothers Discovery, has been under tremendous pressure. So the stock itself is down about 70% over the past 2 years. And we know why that's happening. I mean, they have a huge debt load of about $40 billion, and EBITDA is under constant pressure. So when they combined these two companies and the deal closed about 2 years ago, they promised $14 billion in EBITDA. This year, that's going to be less than I think it's less than 10 billion. It's probably around 9.7 billion. So it's a far cry from what they promised. And the thing is, there's just no visibility into future earnings because, TV advertising is under considerable pressure. So yes, theoretically, I mean, the plan sounds good because studio and streaming, that's really the growth assets. That's where the future lies. So you kind of separate that from the beleaguered, TV networks business. It sounds good on paper. The question is, how are they actually going to execute it? Because TV networks brings in 85% of all Warner Brothers profit. So it's really the cash that is being generated from the TV networks that's kind of feeding into the studio and the streaming businesses. Streaming basically generates nothing at this point. It's just barely breaking even. And studio, as you know, Paul, is a hit or miss business. So it's going to be hard to actually execute, I think.
How are they doing with the advertising tier? I have noticed lately that, when I'm watching Hulu and they force the ads in there, I can't. I just don't have the patience to sit through it. And so I'll switch and watch something else. Netflix has introduced that tier at a lower price, right? Are they making money on that? Are people watching it?
It's still very, very early days, so they haven't given us any real numbers around advertising. All that they've said is that they have 40 million monthly active users. So we think that translates to maybe about 20 million subscribers on that ad tier. That's still small potatoes when you compare it to the whole global subscriber base of around 275 million subscribers. So they have ways to go. But I think they are definitely going to get there. And this is really going to be the biggest growth driver for the story going forward because, there is a lot of there's a lot of thing that they can get in terms of revenue that they can generate in terms of advertising. And they're doing a lot to do that. So they are investing in live sports programming. That's what advertisers like. They're investing in these 2 Christmas Day NFL games. They have WWE content. They're investing in, lots of sports documentaries. They have the Mike Tyson, Jake Paul boxing bout that's coming out a little bit later in November. So they're doing a lot that I think will make them a very appealing option for advertisers.
All right, Geetha, let's switch to a gooder story, a better story, which would be Netflix reporting numbers after the close here today. What are you looking for?
So, Paul, as much as they try to drive or steer the conversation away from subscribers, we still come back to subscribers. So this is at its core a subscriber story. Consensus is pointing to about 5 million new subscriber adds. I think investors are looking for something like 6 to 7 million, just kind of given recent download data and recent engagement metrics. So it looks, investors are looking for something closer to last year's 2Q, which is, again, that 6 million mark. And then again, it's not just the subscriber numbers. We're obviously going to be looking at other numbers too. Revenue growth, which they are guiding to, is about mid-teens levels, as well as operating margin. And it's going to be interesting to see whether they're going to take up those free cash flow estimates. That right now is at about $6 billion. That's what the company has guided to, or whether they're going to revise their guidance for operating margin, which right now stands at 25% for the full year.
What are you watching? You watching anything Netflix?
But I'm watching The Bear right now. I just finished Ripley, which is a Netflix thing. Awesome.
And The Bear is like an FX thing, right?
Yes, FX Hulu. That's awesome. Season 3. So yeah,
what are the shows, Geetha, that are doing the best? I mean, I see in the story that Bridgerton apparently is keeping subscriber growth robust. What else?
That is the number one show on Netflix, and it was the number one show on Netflix for the second quarter. We ran some numbers. We found that just in the second quarter alone, that was the most watched show across the world. Of course, the most watched show for Netflix, 1 billion hours. 1 billion hours streamed for just that one show in the second quarter. And of course, they have
5 minutes. I don't get it.
And of course, they have a host of other shows. But if you just look at the Emmy nominations, which came out yesterday, it's Disney actually that's leading, and The Bear, The Bear,
yep.
Shogun,
yep.
and I think Only Murders in the Building. Those were the 3 biggest nominated shows.
All right, great stuff. As always, Geetha Raghunathan, she covers all the media stuff for Bloomberg Intelligence. She is our go-to analyst on all things media. All right, I'm all in on this pizza thing from Ohio, Rubino's. First of all, great sign outside the restaurant. It's like from 1940. Great sign, Rubino's Pizza. Okay, but the big issue is, what are they doing slicing up? The pizza looks great.
It's delicious.
How
it's
do you
like
slice
a thin,
it? Where's this pizza
crispy
slices?
crust sliced into squares instead
Why
of
squares?
the.
What's a square thing? Who does that?
I don't know, but you know what? That's what I grew up with. So to me, it makes sense. I understand if it doesn't to you, being from the New York area.
But there's a concept of a piece of slice. Is that a concept you guys have?
No, you don't go and buy a slice. You can only go and buy pies, and then they cut them up into squares for you. And you play pinball there. You're drinking Mr. Pibb, and then maybe afterwards you go over to Grater's for some ice cream. It's a fantastic Friday night.
And I tell you, it looks like they haven't really updated it since the 50s, right?
I would say they don't need to.
They don't need to.
Although, if you call Rubino's on a busy weekend, nobody answers the phone.
Nobody. Yeah.
No one.
Yeah, too busy. I mean, the pizza looks phenomenal, so it might be worth a road trip. So
it's honestly worth a trip to Bexley, Ohio, just for the pizza. It's that good.
But am I going? It's Columbus, really.
Yes,
right? It's Columbus, but Bexley for the locals. Okay. All right. So what's your go-to pizza there?
What do you mean? I just pepperoni pie. Yeah.
Just pepperoni. Okay, that's your go-to thing.
I don't know if they have anything else.
All right. What else are you working on? What are you driving these days?
So I actually just got out of a Mustang, which was interesting because 2 weeks ago I was driving this new Mercedes AMG SL63.
Wow.
210 grand. It's got a big twin turbo V8 in the front. Actually, not so big. 4-liter twin turbo V8 in the front. It's a 2-door, 4-seater convertible. And I was thinking, this thing isn't nearly impressive enough to justify a $210,000 price tag. Real disappointment, to be honest. And then I get into this $60,000 Mustang GT. Also got a V8 in the front, a 5-liter V8, no turbos, right? Naturally aspirated. It's a 2-door, 4-seater, rear-wheel drive, and for 60 grand, I'm having twice as much fun as I was in the $210,000 Mercedes. So that's the story right now. Okay. I'm looking to get into some Ram trucks. I was just talking to the CEO of Cummins, and of course they make the diesel engines for the big Rams.
Of course. Yep. All right, so you're all over the place here. All right, I'm very happy with my X3, the best vehicle I've ever driven, and that's even compared to my 5 Series, which with the.
But there's no stick.
There's no stick.
And do you miss it?
I do, but it's the rest of the car. The BMW X3 is so superior in terms of ride and everything that I'm okay. I'll live.
Look what I got.
Wait, why is my album called Simplified Financial Planning?
It's a great way to tell financial professionals about Nationwide's tools and resources.
But none of my songs are about finances.
About that, there's still time.
Wix gives you the power of AI to build the website you need. With full business functionality and a design tailored just for you. Customize every element of your website and watch your vision come to life in minutes. Control everything from the biggest tasks to the finest details. Personalized, optimized, ready to go live.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks lower across the board. The Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000 all in the red right now. Looking at a drop of 27 points in the S&P to 5560, down 0.5%. NASDAQ down 163, a drop right now of 0.9%. The Dow lower by 119, down 0.3%. Bottom line here, stocks struggling to gain traction as big tech fails to prop up the broader market. 10-year at 4.16% with a 2-year now yielding 4.43%. Spot gold up 0.3%, up $7 the ounce to $24.65. And West Texas Intermediate crude down 0.2%, $82.71 a barrel. Netflix shares lower by 0.8%. Netflix will be the big event after the close of trading. Geetha Raghunathan is a media analyst with Bloomberg Intelligence. She was interviewed moments ago right here on Bloomberg Intelligence.
This is at its core a subscriber story. Consensus is pointing to about 5 million new subscriber adds. I think investors are looking for something like 6 to 7 million, just kind of given recent download data and recent engagement metrics. So it looks, investors are looking for something closer to last year's 2Q, which is, again, that 6 million mark.
Bloomberg's Geetha Raghunathan. One other media note, sources tell Bloomberg Apple is having discussions about licensing more films from major Hollywood studios as it looks to bolster its Apple TV Plus streaming service. Recapping, S&P down 28, a drop right now of 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. We appreciate that. Matt Miller sitting in for Alex Steele here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well here. We had a raft of economic data recently, including today we had the initial jobless claims. Came in a little bit higher than expected, but I don't know. The question I think is, has this Federal Reserve already gotten us a soft landing? I don't know. It feels like it. We'll check in with a professional who does this stuff for a living. Joe Brusuelis joins us in studio. How good is that? So he gets a gold star. He's the chief economist over at RSM. Joe, how's our Fed done here in landing this economy?
Okay, so, when we look back on this in a number of years, we're going to think the Fed did an extraordinary thing, a real policy achievement in bringing the U.S. economy in for a soft landing after hiking the federal funds rate by 550 basis points. If the Fed was truly data dependent, we wouldn't be waiting for a September cut. They'd be cutting now. As a matter of fact, if you're all out there, look at the TAYL on your Bloomberg terminal.
The Taylor rule. I love that function, actually.
You can estimate the Fed's reaction function using 4% as a non-accelerating rate of inflation and unemployment. That's the Fed's estimate. And I would suggest a neutral rate of 1.1. You get an optimal rate of 3.9%, which implies the Fed's policy rate, people, is way too tight.
Why do you choose a neutral rate of 1.1? Isn't it higher?
No, I think it's actually, the Fed, John Williams thinks it's 0.5. No, I'm double that. And it indeed may be higher. That's something that's unobservable. We do our best to make that estimate, Matt. But I think that that's appropriate given where the economy is and the structural changes that we're going through. Because I think we're all pretty much here in Wall Street in agreement that rates are going to be higher for longer because inflation is not going to be what it was for the 20 years prior to the pandemic. It's just not, due to the distortions around movement of supply chains back to friendly countries and the geopolitical tensions that are going to cause problems no matter who's in the White House.
Now, if we get a Trump presidency, I'm fascinated by some of his proposals because the whole premise of the Republican Party is that Biden caused this inflation and Bidenflation is bad and they're going to stop inflation, right? But Trump wants to cut taxes. I'm happy about that.
Yes, I know you are.
I'm not fighting against that. But he wants to basically give us a ton of cash. Plus, he wants to put tariffs on everything. That's inflationary, right? Those two things are inflationary. And he wants to stop immigration and deport all of the illegal immigrants that are already here. So that would tighten the labor pool. That's inflationary. Seems like everything he wants to do is inflationary. Is he just not going to follow through on this stuff?
No, actually, after the 4 years of Trump, I actually take him at his word, literally. That's what he intends to do. Right, so if you look at expectations on Wall Street, matter of fact, look at the WIRP screen, Fed funds probabilities. Market's pricing in 100 basis points of cuts over the next 5 meetings. Okay, if Donald Trump is elected, that's a big if, and if he
it's not a very big if.
Well, I don't want to go there.
The odds are strong.
Yeah, I agree, and I see that, and we're all adjusting our base case for 2025 as we speak. But if he gets in, and if he follows through on this, unemployment rate's going to fall. Wage prices are going to go up. The Fed's going to be worried about a wage price spiral, right? Then the Fed will reverse course and begin hiking rates. And there's where we get into what I think is the single biggest economic and financial risk of a potentially second Trump administration, the independence of the central bank. I'm not talking about personalities. Whether Powell is fired, stays, goes is immaterial. It's the instrumental independence of the Fed that's at risk.
I'm glad you mentioned that. Jason Furman, who was the head of the National Economic Council for Obama, right?
Yep.
He tweeted out that he has selected recently announced policies and ranked them in terms of how consequentially bad they would be. Number 1 is the 10% across the board tariffs. This is Furman's opinion, not mine. Number 2 is the $4.5 trillion of tax cuts. Number 3 is threatening independence of the Fed. I would have thought that'd be a little bit higher. Number 4 is permanent tax-free tips. I don't see why that matters. Nobody ever claims tips anyway. And then number 5 is the 5% cap on rent increases that Biden has floated.
Okay, so number 5, I just want to be on the record, that's not a good idea. It will make things worse. And I mean, not just on the supply side of, there won't be an incentive for builders to build homes. People will not want to move, and we'll have the same problem in the rental market we have in the home buying market. That's not a good move. But, I follow Jason. By the way, Jason Furman is an excellent economist, and I envy the people who get to take EC10 over at Harvard from him these days.
Oh, right. He's a professor at Harvard.
He's a professor at Harvard. That's right, and that course is absolutely fantastic. But the thing is, you know what? The people who follow him wrote back. They disagreed with him. It was the Fed independence that was number one. I think Jason was taken a little bit aback by
right.
that.
Well, I mean, I think his premise is that it wouldn't be possible to threaten Fed independence the way Donald Trump seems to want to, but still, you've got to rank them in order of the actual threat.
I saw Liz Truss was at the GOP convention.
Oh,
yeah,
nice.
They might want to be thinking about what a head of lettuce means. Right. Because if they were to try to do something like that, you know, we would begin talking about the bond vigilantes, whoever those guys are. By the way, you know, I live in Austin, Texas these days. I've seen one of the guys from ZZ Top, and I'm like, that's what a bond vigilante is.
Sweet.
Right?
Exactly. That's a great face to put
That's
to the bond
that's what a bond vigilante
Exactly.
looks like. But they will be back quickly, and it will be painful if the GOP attempts to do that or do something more ridiculous, like devalue the dollar, right? Yeah.
So we got the 10-year Treasury at 4.16%.
Yeah.
Where's that going to be year end, do you think?
Okay, so my year-end target was 4.2 with some downside risk. I still think that's, you know, intact. I think that when the Fed gets to the point where it begins to telegraph it's cutting rates, probably right after the July 31st meeting, you begin to see the front end of the curve begin to move down. Because what we're going to be doing here is, this is a good thing, right, is we want the price of money to be positive. We want a term premium that's positive on the yield curve, right? We're going to get a disinversion of the yield curve next year. Hey, guys, this is what's supposed to happen. This is what financial markets are supposed to look like pre-2000 and, you know, pre-GFC, right? Yeah, we're going back to the future, and it's a good thing.
So we will have then, we will have had 2 years of inverted yield curve and no real recession.
Well, Matt, as you know, I'm a firm believer in that the yield curves predicted 11 of the last 3 recessions. I dropped that rule of thumb a long time ago. Don't get me wrong, we pay attention to it because it shows stresses and strains across the yield curve. Stresses and strains across financial markets, but it's not the predictor that it might have been, you know, back in the 80s or 90s.
Back when Paul was at Duke.
That's right.
Back when Paul was skipping Cam's courses
to go play golf. So the golf course is right across the street
How
from the
can you
business
resist?
school. I mean, exactly.
No
World
way.
class.
Who was your professor that he's
Cam Harvey.
Cam Harvey.
Yeah.
So
Really?
Yeah, from
I
Duke.
didn't know that. How cool.
So he's So he's out of the Chicago school guys. So the primary risk, it sounds like from your perspective, is this Fed holds rates too high, too long?
Too high for too long, and of course, oil, right? Those are the real 2 big risks. But, you know, I don't think that investors or firms have really priced in what friendshoring means, what the relocation of these supply chains means in terms of a permanently altered structure of pricing, both domestically and globally. We're going to have higher inflation. We're going to have higher interest rates, right? And I do think that's going to be an ongoing issue, again, regardless of who wins the White House.
I want to get your take on the markets quickly. We only have a minute left, but as an economist, what do you think of the fact that Gina Martin Adams has written about the S&P 493, right? The companies that aren't the giant mega cap tech stocks have been in an earnings recession for 6 quarters. And they're finally going to start to post some growth. At least that's the hope. Do you watch earnings season?
Oh, very closely. We actually use the artificial tool on Bloomberg to go through and look at the key earnings that really are important to our firm. Look, no one likes the overconcentration of risk in the Mag 7. I'm happy now it's beginning to broaden out. That puts a smile on my face. Although I think that we generally are underestimating the positive productivity shock that artificial intelligence is going to bring to the U.S. and global economy. That too should begin to spill over as we're in the second phase of AI where we're past the euphoria.
Right.
Now, how are we going to use that, right?
Yep. So we'll get to that. That's the next big thing in this market. How do you use AI? Joe Bruce-Wallace, thanks for joining us. Appreciate that. Joe Bruce-Wallace, Chief Economist, RSM, joining us here in studio with our news in New York City. Here's Michael Barr.
Thank you, gentlemen. Top Democrats say the pressure from party leaders and friends will cause President Biden to leave the race as soon as this weekend. That's according to Axios. It comes as White House officials believe former House Speaker Nancy Pelosi backed Representative Adam Schiff's call for President Biden to withdraw from his re-election campaign. That's from a Reuters report citing a top White House source with direct knowledge of the matter. All of this comes as President Biden was diagnosed with COVID and had to cut his campaign trip short in Las Vegas. He is said to be self-isolating in Delaware. J.D. Vance mixed his personal history with a populist message as he accepted the vice presidential nomination at the Republican National Convention.
When I was in the 4th grade, a career politician by the name of Joe Biden supported NAFTA, a bad trade deal that sent countless good jobs to Mexico.
Bloomberg's Laura Davison has more from Milwaukee.
He and Donald Trump, he said, would not cater to Wall Street and instead focus on the working man. He, unspooled his personal history throughout the course of this speech. And Vance is only 39 years old, and he referenced the financial crisis, and he blamed what he called, quote, Wall Street barons for, the housing affordability crisis we have today of, the market crashing and then, builders being put out of work and then there being low supply. And he kind of creates this through line, also blaming illegal immigration for there being too much demand for housing.
Bloomberg's Laura Davison. Tonight, former President Trump will close out the convention with his address. Russian court officials say closing arguments in the espionage trial of U.S. journalist Evan Gershkovich will be held tomorrow as the proceedings picked up speed. The court says Gershkovich attended a trial.
Continue straight.
The open internet has changed a few things in our lives.
How much is this?
But guess what the internet hasn't changed? Money. Yep, money.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Another day of selling. A slight bounce off the bottom. Emphasis on slight for the S&P 500 index, but very close to session lows. Down 31 right now, 55.57 on that index. The S&P down 0.5%. The Dow now down 177. 41,025, a drop right now of 0.4%. NASDAQ lower by 0.9%. The Russell 2000 also lower, down by 0.4%. 10-year at 4.16% with a 2-year 4.43%. Gold up 0.3%, 24.66 the ounce. And West Texas Intermediate crude just about unchanged on the day, up 3 cents now, 82.88 a barrel. Stocks are struggling to gain traction as big tech failed to prop up the broader market. Weekly jobless claims, meanwhile, up again. And with that story, here's Bloomberg's Vinny Del Giudice.
There's evidence the party may be winding down. Initial jobless claims posted the largest weekly increase since early May, kicking the tally to the highest in almost a year, 243,000. Continuing claims, a proxy for the number of workers on unemployment, also increased, rising to the highest since 2021. The outlook is in doubt. The U.S. unemployment rate is up, reaching the highest level since 2021 in June. Vinny Del Giudice, Bloomberg Radio.
Shoppers spent $14.2 billion online during Amazon's 48-hour Prime Day sale. That is up 11% from a year ago. And in line with estimates, according to Adobe, Amazon lower now by 2.8%. Again, recapping, stocks are declining 55.55 right now on the S&P, down 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Matt Miller sitting in for Alex Seal today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Looking at the airline business, United Airlines, they said the third quarter profit will fall short of Wall Street's expectations as U.S. carriers slash ticket prices to lure domestic travelers, keeping even the industry's largest players from fully capitalizing on record summer travel. Let's bring in George Ferguson. He does this stuff for a living. He's a senior aerospace, defense, and airlines analyst from Bloomberg Intelligence. George, again, I haven't been on a plane in a long time that wasn't packed to the gills here. If the airlines can't make money now, when can they? What's happening in your industry?
Yeah, so I tell a lot of people, right, you can't confuse airplanes being full with profitability, right? Everything depends on the price paid by those folks flying. Really, the industry is just suffering from overcapacity, right? And United confirmed that today. Delta told us the same thing earlier. We saw Alaska results come out today as well. Their load factors down, yields flat, load factors down, telling